Welcome back to another edition of Stage Analysis, explaining Stan Weinstein's market cycle theory, and today we will be discussing Stage Two Breakouts. So, how to identify Stage Two Breakouts? So if you don't know what a Stage 1 is, go back and watch the Stage 1 video, but after volatility has contracted and price has broken above the 20-week moving average and the Stage 1 resistance, the asset has now entered into a Stage 2 breakout, the ideal buying point. So Stage 2 breakouts often go unnoticed by the masses. Like I said, that Stage 1 period has caused market participants to lose interest in the asset, and often it's right at the time that they should be most interested in it. So every asset has an ideal buying point, and the transition from a Stage 1 to a Stage 2 is that point. So as the Stage 2 progresses, you'll see a pattern of higher highs and higher lows. And like I said, sentiment is usually neutral during that initial Stage 2 breakout. You know, your media coverage will be minimal. The fundamentals often won't be spectacular. And you have to remember, the market discounts information. So Stage 2s precede those improving fundamentals because smart money is front-running the fundamentals improving. So breaking down a Stage 2, this chart should look very familiar to you now. Here's our Stage 1. Price broke above resistance, broke above the 20-week moving average, and then this breakout point at 12 1/8. That is your Stage 2 breakout. So we're going to see price stay above this 20-week moving average. Here's your series of a higher high and a higher low, higher high and higher low, and that will continue throughout the Stage 2 breakout. And we'll come back to this chart later. So supply and demand of a Stage 2. So demand has overtaken supply. Once price moves above the Stage 1 resistance, demand will be aggressive. So like I said, during your Stage 1, supply and demand will often be at equilibrium, and this equilibrium can be seen by price entering this trading range between the support and resistance. And you'll know you're in a Stage 2 breakout when price breaks out of this equilibrium zone and demand will take over. The best performing Stage 2 breakouts will feature breakaway gaps when transitioning from Stage 1 to Stage 2. So what a breakaway gap is you have this pattern formation here. We'll call this, a descending triangle at the moment. But what you see here is at the Stage 2 breakout, price will gap all the way above the zone, and there will be a void here in price, and that's your breakaway gap. So this is important because the breakaway gap signifies that there's strong institutional interest in this asset. In this case, this is a chart of Merck. And that strong institutional interest can be seen by that breakaway gap. Their demand was so strong that price did not even trade at these levels. It immediately went up higher. The best performing Stage 2 breakouts will have minimal overhead resistance, also known as supply, when looking at the last 2 years of price action, and we'll have more of that when we go through our chart examples. And it's smart to remember not to be shaken out by a throwback to the Stage 1 resistance. This throwback occurs roughly 80% of the time during Stage 2 breakouts. So I know it says pullback here, but we're going to call it a throwback. So you get a breakout, and then you get your throwback to the previous trading range. This is often caused by, that smart money that bought down here. They're at a profit. They're going to sell some. But the demand is so strong that price will not enter this equilibrium zone. It will just throw back to the previous resistance, now term support, and move on higher. So throwbacks to the moving average, as much as we would like it to, no asset will go up forever. This is where the 20-week moving average comes into play. So price should stay above the 20-week moving average during corrections within the Stage 2 breakout. Within reason, there's always some ambiguity, always exceptions to the rule. And the 20-week moving average should act as support. So going back to our chart, we see that price held at this throwback to the 20-week moving average. And all throughout this time, price stayed above the 20-week moving average. And that's how you know you're in that Stage 2 breakout. And then finally, the slope of the moving average is the most important thing to watch. As long as the slope is positive, the asset is innocent until proven guilty. So what that means is the slope of this long-term moving average is what really drives the trend of the stage 2 breakout. So as long as the slope is positive, we're going to assume that price will continue going up. And then lifestyle of your stage 2 breakout. So in the beginning, volatility has contracted and price has broken above the 20-week moving average and the stage 1 resistance. Things may move slowly at the beginning. Momentum has shifted, but it has not shifted significantly yet. So be patient and wait for things to develop. Within the middle of a stage 2 breakout, there should be a pattern of higher highs and higher lows as we discussed, and those lows should stay above the 20-week moving average. There will also be additional bases that form. These are good risk-reward opportunities to add to your long position. Let's see if they have any on here. They don't really have any patterns on this stage analysis chart, but we can kind of go over some patterns when we look at our real-life chart examples. And then at the end, volatility will be high at the end of a stage 2 breakout. You'll see large price swings, and that makes it difficult to not be stopped out of your position. And then you'll know you're at the end of a stage 2 breakout when everyone in the world knows about this asset. Often you'll see, this asset being featured on the cover of Barron's. Your mother will be talking about it and she doesn't know anything about stocks. Your father will be talking about it and he doesn't know anything about cryptocurrencies. The asset is frothy. Like I said, sentiment is going to be at an extreme level. Sentiment is going to be extremely bullish. And often fundamentals will be strong at the end of a stage 2 breakout. And we'll come to that. Chart examples. So here's a chart of Spotify, the one that we covered in our stage 1 accumulation video. So here's your stage 1, and then here's your stage 2 breakout. We're above a rising 20-week moving average. We are above the resistance of a stage 1. And throughout this time, price stays above the 20-week moving average within reason. And this is one of the opportunities I was talking about to add to a position within a stage 2 breakout. So we see a base forming here between this, we'll call it this 300 level and this 220 level. And when price breaks out here, this is a perfect time to add to your long position. And then you can see the stage 2 coming to an end. We kind of get this erratic move. This is a 16% move to the downside. And then price breaks below the 20-week moving average with a strong close, signaling that the stage 2 breakout has come to an end. Here's another example. This is JP Morgan back from the COVID lows. So here's your stage 1 forming. Slope is down, slope is sideways, slope is up. We get a breakout above our stage 1 resistance. And here's a good example of a breakaway gap. So like I said, there's this void in price here between the 105 and 110 level. Demand was so strong for JP Morgan during this time in November of 2020 that the institutions didn't even care about these price levels. Demand was so high that they just shot it right up. So here's another good example of a stage 2. This whole time, price stayed above the 20-week moving average. The 20-week moving average slope is positive, and then you can see the stage 2 coming to an end here. We get a strong move down. We'll call it an 8% move down, and it closed below the 20-week moving average. And then just like a stage 1, you'll start to see price oscillate between above and below that 20-week. Moving on to Bitcoin. So here's a large stage 1. This one took about a year to form, year and a half to form. And we'll see the stage 2 breakout here. And then we just see price stay above the 20-week moving average. The slope of the 20-week moving average is positive. And then we'll get our definitive close. The slope starts to roll over, and that's how you know your stage 2 has come to an end. And then if you remember what sentiment was like back in April, March of 2021, that was your laser eyes on Twitter. Everyone that loved Bitcoin was talking about it. They were getting all the airtime on CNBC. That's pretty much all that my feed consisted of was cryptocurrencies and Bitcoin as a whole. Everyone thought guaranteed Bitcoin 100,000. No way it's not going to 100,000. And that's your frothy market environment. That's when things are starting to become extreme. Sentiment is way too high, and that's when you need to look for reversals in a stage 2, is when that sentiment is extremely high. Moving on to Tesla. So back here in July of 19, we kind of get our first resistance here for stage 1, and then in October of 19, we get our breakout into the stage 2. Things got really overextended here. That's why I got a little loose, and price fell below the 20-week moving average. But like I said, as long as that slope of the 20-week moving average is still positive, this asset is innocent until proven guilty, meaning that we're going to believe that the stage 2 continues, which it clearly did. And then here's another great base that formed. We'll kind of use that 465 level adjusted for splits, and that's when on November of 20 we get a breakout, and that's a second edition of your stage 2. Here's a chart of the Investor Business Daily's Innovator 50. This is the FFTY. So your stage 1 forms here back in, between the time of January 16 till July of 16. And then this is a good example of a throwback to that stage 1 resistance. It held as support, which is bullish. The whole time the moving average slope is still positive. So we ride this stage 2 breakout the whole time. And then here's another one for everybody. Same time as that crypto bubble, we have these meme stocks bubble. This is a chart of GameStop. We get this big stage 1 here. We break out on the 20th of August, and then we just run up the whole time. We get a huge pullback. This is an 80% move to the downside. We go all the way from $3.15 to $39, and then this stage 2 is still intact. We come all the way back up to that 310 level. And you got to really trust the slope of that moving average. As bad as things may seem, you just got to hold firm here because that slope is still moving up. So let's see. We talked about throwbacks to the stage 1. That's something we saw on the Investor Business Daily 50. We talked about the Breakaway Gap. That's something we saw on JP Morgan. Now let's go back and talk about that 2 years of previous price history. You want to make sure that your assets have minimal overhead supply when you're going to look for your stage 2 breakouts. So let's pull this one back to 2 years. So, here's 2020, here's 2018. Like I said, very minimal overhead resistance on this Bitcoin chart. So here's your big resistance here. And as you can see, we kind of consolidated here a little bit. Within the crypto world, you could call this a consolidation because, this was a very tight range. It was only down 1%. And then same thing with this one. Even this up move is only 7%, which seems like a lot, but in the crypto world, it's pretty minuscule. And without any of that overhead resistance, it's very easy for assets just to continue higher and higher and higher because like we covered in that stage 1 video, you will not have those trap market participants who bought at higher prices and are now looking to get out at break even. Everyone is in a profit, and when everyone is in a profit, assets will normally continue to trend higher. Going back to Spotify, this was a good example. Coming out of an IPO base, our only real overhead resistance was from the peak of that kind of initial IPO stage back in July of 18. And then same kind of thing we saw in Bitcoin. We had a couple week consolidation within here, and then price moved right through that previous resistance, and then everyone was in the money here. Everyone was making money, so pretty easy for price to continue higher. Let's go back to the Tesla chart. Same kind of deal. Your stage 1 down here in July of 19, and then our only real resistance was coming from this huge base up here. This is your stage 3 base. So once we got through that stage 3 resistance, it was off to the runs, and this one went up about 1,000%, which is definitely what you want to see in that stage 2 breakout. And let's go look at JP Morgan too. Let's see how this one fared out. So going back 2 years, so here's our big resistance. Obviously this one is not as good looking as Spotify, Tesla, or Bitcoin, but still something to take note of. We didn't have any real resistance until we got back to that January 20. And when we got to January 21, we saw a consolidation, and then price continued higher. So, just some things to note. The ideal time to buy an asset is when it's transitioning from a stage 1 to a stage 2. That's the best risk-reward ratio. You're coming out of a large base. We have had to transition from weak hands to strong hands. And like I said, those strong hands want to hold for an extended period of time because they believe in the fundamentals of the asset. So while they're holding, you're continuing to have other people buying, and that's what propels us higher for stage 2. And that's going to conclude today's video. Thanks everybody for watching, and I'll see you in the stage 3. Thanks.